My name is Teri Parker with Cross Country Mortgage. Basically, with mortgages, it's very simple the way that it works, especially in this area. There are 4 different types of residential mortgages. There is USDA, there is VA, there is FHA, and there is conventional. And so I'm going to go over all 4, and I'm going to go over the pros and cons of each, or what I think are the pros and cons of each, and how we review it with your customer, basically. And so with USDA, we don't normally do those loans in this area or let's say in the city so much. We do a lot of them we do a lot of loans for USDA in South Jersey or in the outer counties of Pennsylvania. But with USDA, it's very simple. It's 100% financing. The customer can get closing cost assistance just like any other normal transaction. In addition to that, there is a credit score requirement, which is 620. There is an income limitation to USDA, though. And so the income limitation does vary based on the area of where that client is purchasing a home. And in addition to that, the way that USDA works is kind of a little unique. And so in areas or loans where they're county specific or neighborhood specific, USDA is actually property specific. So you could have an area, let's say a block of property, area. You could have this property is not USDA approved, this property is USDA approved, and the one right next door is not. And so even though sometimes you may see the listing agent advertise that it's USDA approved, your client's like all excited because obviously they know they can get 100% financing if they meet the income limitation. The downfall is that that property may not be USDA eligible. And so it's super important to check with your lender or obviously myself and my team, and we'll check and ensure that the property is eligible. And so I would, just to give you kind of like a variance on volume, we lend on about 500 loans a month in our company, in my region. I do about 500 loans a month. And out of those 500 loans a month, I would say that we probably do 1 loan every 2 months USDA, to kind of put it in perspective. So it's a very rare occurrence, and most of the time to be honest, it's in New Jersey. And so you probably won't see USDA loans often in your market, in my opinion.